Well, Tata Motors had their earnings yesterday, and we have a very special guest with us, Mr. PB Balaji, the CFO at Tata Motors. Thank you so much, sir, for joining, and
Thanks,
many congratulations on your earnings.
Thank you.
So, we'll start with your strategies first. We saw that the cash flow was positive. What are your strategies further to maintain this and profitability in the future?
See, firstly, I think the fact that we deleveraged this business in the last 5 years and we now net cash, a lot of it has come from the way we have put the product strategy together and the way we manage costs and how we ensure that each business lives within its own means. And if I take the individual businesses separately, JLR has had a very good ride. Their main flip was to say we will move this business from trying to ape any of the other players into the world of premium luxury. On that basis, if you see the work that got done on Range Rover Sport, Defender, has ensured that this business is actually able to deliver a much higher average realization per car than what used to be selling in the past. At the same time, the focus on return on capital employed has also meant investments are now returning the money that they are supposed to be delivering. And the combination of the two has also meant that the cash flows have been very, very rich as far as JLR is concerned. The commercial vehicle business, on the other hand, has always been a cash positive business. Here, our main focus was to ensure that we win in every segment and at the same time ensure that every business is able to deliver cash compared to what was there in the past, where the heavies and the non-vehicular business were the only ones delivering. In this, we have got our act right in most of the businesses. An area where we still need to do a better job is on small commercial vehicles, which is plan of action for this year. Passenger vehicle has been the person who's been bleeding cash for a lot many years. I think that got fixed way back in 2021-22. Since then, that business has been generating cash, the passenger vehicle side. And all the investment that are needed on the electric vehicle side, we then ensured that the TPG investments are funding it on that side. Now with PLI investment, PLI money is also starting to come in, future investments also get funded on that basis. So if you take a combination of these three, the fact that you've gone net debt free gives us now the ability to actually sustain this inherent profitability of the business, because you're getting a savings on the interest line as well, which earlier that used to bleed as well. So that's how we are managing this entire show. And as we look ahead into next year, I think domestic CV, PV, I think it's far more clarity is there as to how we play this game. JLR, we need to be more flexible, because with the tariffs not being clear, and more importantly, it's substantial number of monies that need to be, whether the expenses will go up. We need to ensure that we diversify demand, and we also ensure we live within our means on the cost side. So that is going to be the key thrust area as far as JLR next year is concerned.
Of course, I want to understand one thing. We saw that Q4 profit dipped. What is the core reason? I want to understand what is the main reason for this, and how are you making it up?
See, the profit, we take various lines. Yes, you're right. The PAT dipped by 51%. Yeah, but that is needs to be seen in the context of last year, same time, we had a deferred tax asset that we recognized of almost 9,000 crores. You adjust for that, so maybe it's better to look at the profit before tax. The profit before tax and exceptional items, even if I remove exceptional items from the equation completely, the underlying PBT is the highest ever we have recorded. So that is going very strong. So this is a deferred tax is actually the recognition of a deferred tax is basically a signal to say that this business is going to be profitable and will pay tax, and therefore we are now, all the losses of the past have been recognized as an asset which I can set off. So it's a vote of confidence that happened last year. You're seeing it play out this year, that's all.
Of course. So we can see Tata is a legacy brand, and it is always been in demand. How are we seeing the demand, whether we can differentiate between urban and rural? Can you make us understand that?
You're talking India domestic,
yes.
So on the passenger vehicle business, I think demand for us, the market has been a weak market this year, but it needs to be seen in the context of two blockbuster years that happened back to back. And therefore, this is just a bit of a consolidation phase from that perspective. And I would expect to see growth coming back in moderate way this year. And from our perspective, the portfolio, we would want to grow much faster than the market this year. But otherwise, not so much to choose between urban and rural at that point in time, at least for the passenger vehicle business. But and for us, we are more urban centric rather than rural from that perspective. So we do see this as a moderate year, and it should pick up coming year.
So how are you seeing the adoption of EV? Is it slower? Is it higher? Like, what's your plan B for the profitability?
See, this year I think the electrification overall as a country, we dropped from about 2.7% of our portfolio being electric to 2.3. Tata Motors, it went down from 13% to 11%. Most of that decline has happened because of the fleet segment going down. And fleet segment went down because FAME incentives went away, and some of the fleet operators had a few challenges that they are dealing with. We expect to see that normalizing next year, and we are also working to ensure that we put through products that are able to cater to the fleet demand, even though the FAME incentives are not there, and we are able to benchmark the CNG pricing as well. So that is a plan of action for restoring fleet sales. And as the product intensity increases in terms of, we have the Harrier EV launching, we have the Punch mid-cycle refresh coming through, and we have the Sierra EV launching. I think we are well served on the product portfolio side to drive growth next year. Profitability wise, I think PV will get back to a double-digit growth, double-digit EBITDA next year, for which the interventions are already underway. And on the EV side, it's already a strong EBITDA business thanks to the PLI benefits. Even if I take PLI out, I think we are now EBITDA neutral on this business before investments. And that was the plan for this year. We are delivering on that.
Okay, like talking about global, as in, what are your strategies to expand internationally as well? Because we see geopolitical tensions here and there, everywhere, in midst of times or anything. So what are your strategies? Are you planning to expand much more further, or you will be stabilized?
See, on passenger vehicles, we have no major plans for expanding outside. I would want to double down on India completely, because this is the third largest market in the world. So I would rather focus here than go elsewhere. And JLR is a global play in any case, so we'll continue to play that card there.
Yeah, absolutely. And also I wanted to know that any plans on EV going into international markets as well?
I think Avinya would be a good product to look at as and when it launches, because it is designed globally and delivered for global audiences. So therefore, we will see that at an appropriate time. Currently, we want to focus on India.
Absolutely. So just one thing, like if the geopolitical tension which is happening right away, do you see any demand affecting in any way, or if this tension continues for a longer time, do you see any particular regions having an impact on the demand?
See, I would expect the tariffs wise, US should face the maximum pressure on demand compared to last year, because the tariffs will increase the cost of the vehicle, and therefore that could be pressure there. But the premium luxury business is relatively more resilient to such changes than the rest of the market. So we should be lesser impacted. At the same time, we can't be sanguine about demand and say nothing will happen. So we need to be preparing a plan B for that. And we see opportunities in the UK market where we are getting back strong growths. I see Europe starting to come back into the equation. China is stabilized. And I would also expect the rest of the world, Middle East, India, all this also coming into the party as well. So we need to actively move sources of growth into these markets, and that's one of the plans that's currently being executed.
Well, you gave us some lovely insights. Before I let you go, sir, just one more question, like how are you maintaining the efficiency of cost cuts, especially what are your strategies in cost cuts and improving more manufacturing and demand? How are you pertaining to that?
See, cost out has been a very, very key muscle that we have exercised quite a bit, and there is a fair amount of capabilities within the company, both in JLR and in Tata Motors. And that will get even more flexed this year because of the challenges that we have in the external market, be it on the demand side or on the tariff-led cost side. So that is something which we are ready for. Interventions are already happening. In JLR, we're specifically looking at warranties, non-works, other works expenditures, ex-works pricing, what we're doing on VME, how do you actually juice our FME better, how do you drive mix better, how do you get China back on growth. So there are multiple interventions underway in JLR to flex that. Domestically, I think the main one we need to get our act together on the cost side would be on the passenger vehicle platform costs. That we are on track to deliver that.
Well, thank you so much for this information, and we are always looking forward for launches of Tata, which is going to happen very soon, right?
Just happened, yeah.
Yeah, it just happened, and always it will happen. Thank you so much, sir. It was lovely speaking to you. And we would love to have a chat in future for you. Thank you so much.
Thanks a lot. Thanks for having me on the show.
If you like the video, do like, comment, share and subscribe.